Welcome to the Sector Spin with Terry. In this video series, I share with you what I'm observing in various sector industry subgroups. Now, just as the calendar continues to rotate through the seasons of the year, sector performance also continues to rotate with respect to the benchmark S&P index. Now, the Fed has announced its intentions to reduce bond purchases, begin increasing interest rates with a focus on bringing inflation under control to their long-term targets. But this video is not about what the Fed is doing. It's more about what the markets are pricing in for these expected Fed moves. Now let's begin with a look at the current weekly sector relative rotation graphs. Now, if you've been following me for a while now, you should know that this graph plots the relative strength ratio of each sector versus the benchmark S&P here on the x-axis, the relative momentum ratio of each sector versus the benchmark SPX on the y-axis. Now, this analysis gives us a visual depiction of the sectors outperforming or underperforming the S&P and gives us clues to where the trend is heading in the next several weeks and months ahead. Well, this quadrant here is the leading quadrant, meaning that we have higher relative strength ratio and high momentum currently in the consumer discretionary, the technology sector, and recent new entries here with the materials sector and the real estate sector. So I like to focus on the stocks that are either improving here, such as the staples and utilities, but more likely what we're looking for is we want to find some opportunities where we have existing leadership in the sector, but we want to look for some of the candidates in those sectors that are actually doing the improving and moving into these groups. Just because we've got vertical decays here, remember this is not price, this is a relationship of momentum versus the benchmark S&P. So the S&P will be here at the crosshairs, the origin 100-100. And this just shows you the last 4 weeks. I've got 4 line segments here. This is a weekly chart, so that's what this explains. Okay, so for the past 4 weeks, we've actually seen momentum fall off in the consumer discretionary, coming down the y-axis. But here with the x-axis, where the relative strength is, the relative strength essentially has been holding constant. Now, relative strength is what's going to be making you money here by holding stocks where the relative strength ratio is outperforming the benchmark S&P. Okay, you want to be identifying those candidates. So let's take a little bit closer look here. I'm going to look into the materials sector. What I have listed here in this particular rotation, this is the top 20 by market cap in the materials sector. There are more stocks in there than that, but I like to track the top 20 by market cap. And this plot here is a price chart of the ETF, the XLB, that tracks these stocks. And as we've seen here, we've gone through a few little small corrective periods, and maybe in another smaller corrective period happening just about now. But overall, the long-term uptrend is looking good for the materials sector. And from a seasonality perspective, January is typically a little bit lower average returns over the last 10 years, but February is a bigger boost. March looks like an underproducer, and April is really where it's going to pick up some steam. But nonetheless, this is just a regression to the mean over the last 10 years. In any given year, you can have tremendous outperformance that does not follow these seasonality. So I don't make my trades based on the seasonality, but it's just a little bit extra conviction if you happen to be trading where you're in one of these higher zones here. But I'd rather take a look at what's happening in the price performance. Again, I want to look and see what's happening back here in the overall sector. And we can see if I animate this back, the materials sector originally, I'm going to go back to mid-November. started moving in a northeasterly heading, and that northeasterly heading means that it's gaining relative strength and momentum simultaneously. And industrial sector was following it, but it kind of material sector pulled away from it. The color changed here in the vector, which indicated that the weekly price trend became improving, and that's a good sign. So that's about mid-December, and we've continued to see the materials sector accelerate through and now actually penetrate into the leading quadrant with an easterly heading, meaning that it's week over week it's continuing to gain relative strength. Okay, so enough of that. Let's come back over here and take another look. We look inside this relative rotation, and we can see the top 20 or so stocks that I have listed in the materials sector, and I'll do that same kind of animation for you. You can see if we go back here to early November, we really had no leadership out of the materials sector. Maybe one stock, and that one stock had a little momentum fade. Sherwin-Williams was weakening, but anything to the right of the vertical axis is going to be a leader. But there really wasn't much there. Now, there were some initial signs that some of these material stocks were starting to improve. And as we move through November, you can see more and more of the stocks moving towards the leading quadrant. These stocks are starting to appreciate in price quite considerably. And then we get a group that pushes up here into the leading quadrant quite nicely into December. Okay, and now we have many more in the leading quadrant. They are continuing to see relative strength gains. There's a few more coming up again. Some of these ones that were down here in the lagging quadrant actually making a rotation and turn back to the north as well. All right, but really, let's take a look here inside the materials sector. The sector itself is decomposed or categorized in 9 different industry subgroups. Okay, so there's the U.S. iron and steel, the paper, the commodity chemicals, non-ferrous metals, container and packaging, U.S. specialty chemicals, aluminum, mining, and gold mining. Okay, and so these industry groups that are from the Dow Jones listings here can be plotted versus the benchmark S&P, which is what we have here on this RRG. So let me show you what's happening there. So here we have the aluminum index, the iron and steel, and the paper total stock market all in the leading quadrant right now. They do have some momentum fade, but I'll take you back just a few weeks here. We'll go back into, let me show you one more thing I was doing. These are monthly rotations. Let me tell you about that. So the weekly rotations, we're looking anywhere from say 3 weeks to 9 months in the future, but the monthly rotations are going to use for much longer term for really investing cycles. And when you find sectors that have been in this monthly cycle for as long as they've been in that leadership condition in the monthly cycle for a very long time, these are the best groups to hold on to. So we kind of like to do 2 different screens. Let's take a look at anything that's in the monthly but may also be in the weekly. Okay, and let's see if we can find that. So when I zoom back out here, I want to show you that the aluminum index was in the monthly. It's actually seen with a recovery play, right? Because it did weaken. We can see that it came out of the leading quadrant, pushed down into the weakening, but now it's got a hook reversal. It wants to soar right back up here into the leading quadrant. We also have the non-ferrous metals index, and we have specialty chemicals index and the weekly charts that are moving over here into the leading quadrant. Now the iron and steel is this blue one here, and I told you I like seeing those blue northeasterly vectors because that tells me that the general trend inside this particular sector or industry group, as this may be here, is gaining relative strength and momentum simultaneously, and it's approaching this leading quadrant. So I'm going to focus on this iron and steel index, and then we can go pull all the stocks that are listed in there. There's about 30, I think, in this list that I have here. Let me pull that down. Let me, I'll show you this. I'll just pop that up. It should make that a little bit larger for you. So you can see most of the stocks that are included in this list. Now I have this on a weekly table. This percent price change is this week. Today is Thursday, January 6th. So we have about 3.5 days worth of trading involved right here. This column is my relative strength ratio, which I really pick as a key thing. And so that's the x-axis. Think about this column here as the x-axis for that. And I can sort these then by their relative strength, and I want to focus in. I don't necessarily buy them at their high on their relative strength. Again, I want to buy them over here. I want to see them move this direction. And you can see there's several candidates in here, that are also showing us some blue improving trends. They've got rising momentum. They've got, some of them have already got leading weekly price trends. This one's green here. And they're generally trending in the north to northeasterly heading. So several of these stocks may be fairly good candidates to look to add to your position. If you're looking for something besides technology, maybe you're looking at a value trade, or you want to rotate into value, or you want to increase your portfolio allocation, this is the type of homework that you need to do. You need to find yourself some high quality candidates that appear to be moving with the trend. Remember, the trend is your friend. Okay, trade with the trend, not against it. That's my motto. Let's pull this chart up here. Let's take a look at what this is here. This is Reliant Steel and Aluminum. I'm going to go ahead and make that full screen. And what I have plotted here on this, I have the red is the 200-day simple moving average. The blue is the 50-day moving average. The green is a 20-day moving average. So I have really some simple technical things that I put on here. I'll show you another little trick I do is I look for historical significant turning points to be support and resistance. And I will say that this dip that we had here in September, where it rapidly rebounded, was most recent strong support area for this particular stock. And actually from this point, this stock has actually continued in a rally. I can then let's draw some trend lines through the lows. Higher lows mean the stock is trending in an upwards direction. So there's 1, 2, 3, 4. There's 4 in a row there of higher lows that were set. And some people can even they want to do parallel trend channels. So let's just copy that tool and let's just paste it right there. Now I have 2 trend channels. I arbitrarily picked this high here to land that from. We could just as easily just put it right there if you like and call it a parallel trend uptrend channel from here to there. I also see, if you're into Elliott waves, I highly suggest you check us out at Trading Analysis, because we use Motive Wave software to plot our Elliott wave techniques. But if you're a skilled Elliottician, generally after you've been doing it for many years, such as I have, these wave counts just kind of automatically appear to you. 1, 2, 3, 4, up in 5 in a leading diagonal move, up in 1, A, B, C, down in 2, 1, 2, 3, 4, 5. I see that we've already started a move higher in an impulsive uptrend. Let me go ahead and just throw some symbols down for you. I'm going to go ahead and start with a minute degree, call that 1, 2, 3, 4, up in 5, and then we're going to call this 1, 1, 2, up in 3, 4, and I'll just throw some forecasts out there. And let's go back here, let's label this A, B, C. Okay, that's how easy it is to do Elliott once you understand the rules and the the methodology. And the other thing is we'll look at Fibonacci ratios for key support levels, and it looks to me like we've got about a 61.8% relationship of this move from here to there. So let's do that. It's not that hard to do even here in Optima. Let's just pull that up. Yep, see, a trained eye can easily pick that up, and I didn't do this ahead of time. I'm doing it live right now while I'm recording it. And you know, there's a 618. So this is a perfect fib response area. It's a good support level. And so now I've got a higher degree conviction that we're going to continue higher. Indeed, we can even do a fib expansion from here. Let's do this. Let's go from here to there to there. And I'll tell you that the 100% fib expansion in the wave 3 versus the measured move in wave 1 is at 180. And more than likely, we even have a potential to move all the way up here to 200, which is the 161.8. Now, I know Bennett loves doing this in motive wave, and I just wanted to show that you can do a lot of the same style of technical analysis here in Optima. I won't discount motive wave for its beauty in performing all this Elliott wave magic, but there's what I see. Anyway, this is just one stock that I happen to just randomly pick. Did not pre-prepare this at all. You're seeing me do this live right now. I see more movement. You can do the same kind of analysis on several of these stocks that you're seeing right here, and I would appreciate if you would let me know. Drop a comment in the below the video. Let me know what you found out. What are you tracing? What are you eyeballing? All right, let's move on over to real estate. So the same kind of thing here in the real estate sector. There's about 30 stocks here in the XLRE, which is the ETF that I use to track. And the XLRE is also moved up into the leading quadrant. This is a weekly rotation for stocks, and there's been a large group of real estate investment trusts, that's what these are called, Reits, that have been over here in the leading quadrant already, but there's several more coming up behind with these beautiful blue vectors, these northeasterly headings. And some of them have just turned a little yellow here this week because we're having a bit of a pullback this week as we start off, but you can see those beautiful trends. I don't let these yellow things scare me when they get over here into the leading quadrant. Okay, it just gives me an opportunity to buy in at a better price. But I don't buy straight off of looking at what I've got here. I want to go in. I'm going to pull the price trend up here. I have not looked at PSA in a while, and apparently the last time I looked at it, I marked an all-time high right here. It probably was in November. That's what that red line is. I typically like to put my support and resistance zones in here as horizontal lines. Let's just move this. This guy has pushed all the way up here on December 31st at the very last trading day of 2021, set an all-time high in public storage. Indeed, the ETF, the XLRE ETF itself, set a new all-time high the last trading day of the year. Again, don't let those all-time highs scare you out of trading into the market. If I zoom out a little bit more, you can see we've had a beautiful uptrend in this stock for quite a while. I will say that if I do extend this up here, we did either, if I go through a high dated back June 2020 through the high that we hit September 1st, we do have a little bit of an overthrow here in that. But I'll tell you what, you could easily parallel this. Let's do this here. Let's I don't want the chart, I want the tool. Copy the tool, and let's throw that there. We possibly have, this is a mid-channel trend line and not the actual high of the trend line. That could actually be that we've got a lot more room to the upside where we could play in this particular stock. So So yeah, I would pay attention to how it's performing right here, but I certainly wouldn't discount the fact that there's an opportunity for it to continue to move higher. Certainly it looks like we have breakout and impulsive move, and we've got from our relative rotation signals, we've got the indication here that it's rapidly gaining momentum and relative strength, and it's continuing to do so. It's not just a one-time thing. This is a whole month's worth. So when you see this high momentum, you're seeing the institutional investors they start to accumulate these stocks, okay? So the money inflow is into these stocks when you're seeing them rise like this, and that generally also translates directly over to price appreciation. Okay, inside the real estate group there is also an industry subgroup. Okay, I've got 9 different industry subgroups here in the real estate. There's mortgage REITs, retail REITs, hotel and lodging, real estate holding and development companies, I think. Diversified REITs. Let's move this label over a little bit more. Yep, there we go. There's diversified, residential, and industrial and office, real estate services index, and a specialty REIT. Okay, don't ask me to go through and tell you exactly what all of these are holding, but if we pick one that we like, then we can go in and we can pull the list of stocks that are in each one of these groups. Now, this is sorted by percent price change this week. Let me resort it by relative strength. Okay, so the one that's the highest relative strength currently is this industrial and office one. So now let's move over here and take a look at, zoom out here. This is, right now we have 2 of these real estate industry groups in the lead. We have the industrial and office REITs here, and we have the retail REITs. But rising back here up out of the weakening quadrant, back with another northeasterly heading, is the residential REITs. And that's actually a positive sign. All 3 of these look to continue to make their moves higher. We also see the hotel and lodging having made a bit of a hook. Okay, I'm going to take you back in history and just kind of animate this. You can see hotel and lodging back here. COVID obviously putting pressure, concerns with that on the travel industry and the hotel. But recently we've seen a turn back in that vector, back to the north, and we're starting to see a resurgence in hotel and lodging. Now, you're probably familiar with stocks such as Marriott and Hilton, as individual stocks, but we will look inside a real estate investment trust that holds a lot of different properties, that probably Airbnb, things like that. What else we have over here? Real estate holding and development index. Yes, all of these are increasing in spite of the fact that the Fed is planning on increasing rates, which we know ultimately will translate into higher mortgage rates at some point, but there's still a big housing boom and a rush to real estate marketing and all of that coming back in. So this one's got a nice blue improving trend, but these guys over here in the lead, this one is the one I want to focus on. Let's take a look inside the residential REITs right now. This group has 14 stocks. Let me make the font just a little bit bigger there for you. Okay, I've got 14 stocks that are in the residential REIT. You can see the names. Now this week's price appreciation is negative on these guys. So yeah, this is not necessarily a good week, for making returns. There's some pretty ugly looking numbers there. But if the longer term trends are positive, we may actually have a buying opportunity in several of these. But we need to continue to do our diligence. Let's take a look at the RRG itself, and I'll go ahead and pull this over so you can see, if you can see the names of the stocks, and you can see how I have them sorted by the relative strength ratio there. Now we've got this one called Next Point Residential Trust. Don't know anything about these stocks, don't own any of these, I don't believe, that are in this list, but hey, I might after doing my own research here, right? So next point, residential trust. Indeed, each one of these trusts, if you go to their own home website, you can actually find out specifically what these geographic areas or what type of content that these properties are holding, or sorry, what type of properties that these REITs are holding. Okay, so you can do more fundamental analysis. I'm focused mostly on technical analysis here, and I'm just telling you that right now this stock right here has been not only outperforming the benchmark, but it's been outperforming even the rest of this group here. It's probably not a good time to buy this one. I'll pull your price chart up and I'll show you why. But I'll tell you, had we picked this one back when it was starting to move higher in the improving quadrant, we could have had a pretty nice little profit. I haven't looked at this one at least since May, maybe April of last year. But let me just grab this. That's my all-time high line. Let me grab it. Oh, it's not letting me grab it. Come on, there we go. Wow. We went all the way from April last year from 50 to 83. If I do the math quickly in my head, that's about a 60% gain. That's a really nice uptrend there. Matter of fact, the uptrend actually looks to have accelerated sometime around late October. You know, I draw a support line in here from here to there. Whoops. Let's try that again. Let's do that there. And let's draw that there. You can see what I'm talking about. The slope of the uptrend has actually improved. Okay. We may be in a period where now, when you get up here in this high in the leading quadrant, you've pushed your gains pretty far. You might actually see not always a price decay. You simply might just see sideways movement until you play catch up. Here's the 20-day simple moving average, the 50-day moving average. You can see the price has been running above the 20 for a long time. Okay, it's barely broken. It's been back in September before it even challenged it last time. Might be a little opportunity for some consolidation here, and or if you're getting a dip in the market, you might actually want to, get a good price back on that. I done messed my chart up. Let's put that back there and do a little housekeeping here while we continue. Okay. All right, so I'm not going to tell you exactly which one of these to buy because I don't know your particular trading style, your risk tolerance, your time horizon, etc., etc. But I'll tell you these are going to be a lot of good swing trade candidates inside these various groups. And like I said, you can go in here to this. Let's take a look here at the retail REITs. Just type it in. I've got all of this stuff organized here in my Excel. Here is the retail REITs. See if we can get this one to open. And I've got various page layouts that's stored inside of Optima. This is a great tool that we like to use it. Not just for the relative rotations, but for a lot of other stuff too. Make it a little bit bigger. And sort these by relative strength. Simon Property Group. This is one of the ones that is the larger market caps, and I like that one. Simon Property Group is our leader in terms of relative strength. We've also got several others coming behind it. Tanger Factory. What is this? Saul Centers, BFS. We've got FRT, Federal Realty Investment. Kimco Realty. I know that one. One Liberty Property, and look over here, there's quite a few in the improving quadrant moving with the northeasterly vectors, and those are the ones you want to focus on. Let's take a look at what is this? Brickmore Property. Don't know anything about it, doubt that I've ever looked at it. And let me just see what I see here with in the price. Okay, there's the COVID dip way back here, and you can see pre-COVID levels were broken about April a year ago. The price rallied and then it started moving sideways. So what we really had in this period here, there's really been quite a bit period of sideways price consolidation. This is kind of what I was alluding to a while ago with that other stock that had pushed really high. It was sitting right about here, and I was usually saying, yeah, it probably could do a little sideways consolidation before it continues its uptrend. And that's what you can see here. This particular stock has made a sideways consolidation from about June of last year through December here, and now is breaking above and out of that range as the price is moving ahead of the 20, and the 20 is moving ahead of the 50. You've got all of the momentum is rallying back into this particular stock. So I like what I see there, guys. Hey, I'm going to leave it there. Follow us at tradinganalysis.com. Become a subscriber so you don't miss out on how we leverage this powerful technical analysis tool to provide our clients with quality market analysis and guidance to safely navigate volatile times in the market. Contact us at info@tradinganalysis.com if you want to know more about how we can improve your trading. Best wishes in all your trading ventures in 2022.